It's almost Halloween, and the metal markets are getting spooky. Today, I'm recording this on a Tuesday morning. The prices of silver are down about 5% this morning. This is following a drop of 5% last Friday, so the prices are down 10% now. We have entered correction territory. At least we have here in Canada. I'm looking at prices in Canadian dollars. In your country, in your currency, the drop might be a little bit different, but you're probably seeing substantial drops where you are as well. So what's going on here? Let's talk about it. Prices of silver have gone up a lot over the past couple years. I'm seeing some silver that I bought a year ago almost double in price. So it's not that bad, in my opinion, to lose 10% after these crazy times where the prices have skyrocketed so much. I don't think that a correction is necessarily bad news. I think it could be a healthy pullback. That said, I don't know what's going to happen next. I'm recording this in the morning. By the end of the day, everything might look different. The price might recover. It might drop some more. I don't know. Silver is volatile. That's how silver is. Historically, silver has been volatile for years. We haven't really noticed that too much in recent memory because the price of silver has been stable for a while. But this year we're seeing volatility come back. We're seeing the price rise very high, and then we're seeing corrections like we're seeing right now where there are 10% drops. No idea what's going to happen next. By the time I'm done recording this video, the numbers might look different. That's why it's volatility. So what do we do now? Are we near a top? Should we sell our silver before it completely crashes? Or is this 10% pullback a good chance to buy more silver? Let me know in the comments what you're doing. I'm not really changing my behavior. I'm doing the same thing as always. I'm buying silver on schedule whenever I can. I'm buying little pieces. And I'm not really looking at the price. When I have some dollars available, I'm going to buy some silver. If it's expensive, I'll buy a little bit less. If it's cheap, I'll buy a little bit more. Over time, all these bumps in the road, they smooth out. But still, I mean, I get it. It's not fun to buy a piece of silver and then watch the price drop 10% within a few days after you bought it. I just bought some silver recently. I saw the prices drop. It's never fun. But I look over the past few years of collecting silver, and I look at silver that I bought 2-3 years ago. It's gone up so much that I'm not too concerned about these recent drops. I think it's a good chance to buy more. If the price drops again, we can buy more next month. If the price goes up, then our old silver is more valuable. We're happy. Either way, I think we're going to be okay. Long term, I'm very optimistic about silver. Silver has all these industrial uses. It has uses in jewelry. It's not going away anytime soon. The price is not going to crash completely. Silver is always going to be important. It's a useful metal. So this is not something speculative like some kind of crypto coin or like a speculative stock that could just drop to zero entirely. Silver is volatile, but it's always going to be worthwhile to stack. It's always going to be worth a good amount of money. So there are ups and downs. I'm still collecting it. I'm not worried, but let me know in the comments what do you think. I want to hear what you're doing. I'm not an expert. I'm just a guy who collects coins. Let me know in the comments what do you think. So you might notice on the table I have a few coins to show you today. These are some coins from my collection, and one in particular is relevant to this discussion. Take a look at this coin. I'll try to get this into focus here. On this coin, you can see a bull and a bear. A bull and a bear. Now, the bull and the bear, as you might or might not know, have important symbolism when it comes to investing, whether it's investing in metals or just investing in anything like stocks or bonds. The bull represents a market where the prices are going up. It's a bull market. The bull's horns are pointing upward. He thrusts his horns upwards. Let me see if we can get this into focus again. And he is a symbol of rising prices. Now, the bear is the opposite. The bear is a slow, lumbering animal. which swipes his claws downward. So the bear symbolizes prices that are moving down. Both the bear and the bull are large, powerful animals. Neither one of them is better than the other. We can use both to our advantage. When the bull is in charge, when prices are rising, we can either sell our metals or we can just be happy to see them go up in value. We feel richer. When the bear is in charge, days like today, when the bear is swiping his claws downward when the prices are dropping, we can use that to our advantage as well. We can buy more metals. And these two animals symbolize not only the metals market, these are used extensively in the stock market as well. You hear stockbrokers and stock investors talk about bear markets and bull markets all the time. For you, I know that this probably sounds obvious. You've probably heard about the bear and bull, but you'd be surprised. I talk to people who've never heard of these symbols and what the animals represent. So for those of you who don't know, I'm showing you the coin and talking about them a little bit. Today, it seems like the bears are in charge. Silver is down 10%. But 10% is not that bad. It's not... I hesitate to even call a 10% drop a bear market. I think of it more as a small correction. If it drops another 10%, then maybe we'll say that the bears have come out of hibernation and we're in a bear market. I actually don't think we're there yet. Maybe the bear made a slight appearance. He poked his head out of the cave. I think he's going to go back to sleep. I think this is still a bull market. I could be wrong, but looking at the history of silver prices, looking at the prices that we've reached in 2011 and 1980 when we reached highs in the silver prices, we're not there yet, at least not adjusted for inflation. We might be there in nominal terms, but in real terms, the silver market is not yet at all-time highs. I think that we still have a lot of room to grow. And if we look at the gold to silver ratio, we also see that the gold and silver ratio shows us that silver, even after the recent gains that we've had throughout the year, it's still pretty cheap compared to gold. The ratio, I don't remember what it is right now. It's between 1% to 2%. So it's pretty low. We have a while for silver to rise before it even reaches 2% of the price of gold. So I'm optimistic, but I don't know. I have no idea what's going to happen. This is just a gut feeling. It's based on partly just my own feelings, partly on looking at data, partly on looking at the narratives that are popular among investors and other metal channels on YouTube. But we don't know. One thing I am fairly confident about is that both gold and silver are going to keep outperforming fiat currencies. I recently looked over the past 10 years of my own expenses. Just day-to-day expenses, not on anything like gold and silver or stocks, just things like gas, groceries, housing, regular expenses that I need to make just to live. And I noticed that my own inflation rate, just doing rough back-of-the-napkin calculations, is roughly 6 to 7% a year on average. Now, I looked at the official CPI inflation rate published here by the government of Canada. In your country, your local government probably publishes a CPI number as well. Here they tell us that CPI is about 2 to 3% a year. That's what the Canadian government is telling us. So why is the government telling us that the CPI is 2 to 3%, but I'm noticing 6 to 7%? So I hopped onto the Government of Canada's website to see how they got to 2 to 3%. How are they calculating it? And this is what I found. I'm going to read to you right now from the Government of Canada's website about their method of calculating the CPI. Are you ready? Okay, here we go. The Government of Canada says, the information collected for the purposes of calculating the Consumer Price Index, CPI, is confidential, as defined by the Statistics Act. Thus, Statistics Canada, which is the Government of Canada, is prohibited by law from releasing any data that would divulge information obtained under the Statistics Act that relates to any identifiable person, business, or organization without the prior knowledge or the consent in writing of that person, business, or organization. And it goes on and on and on. A lot of legal mumbo jumbo. But the key takeaway from this is that they're not telling us how they're calculating the CPI. They actually say it's confidential and it is illegal for them to tell us how they're calculating it. So they're not even being coy about the fact that they're hiding the information. Very suspicious if they're not telling us how they're calculating the CPI, how they're getting to that 2 to 3%. We can't look at their data. We can't do a check on it. We can't confirm that the numbers are real. I think that the CPI, I've heard it called CP lie. I didn't invent that pun. Other people have invented that joke, CPI, CP lie. But it's true. It does seem to be, it seems to be a lie. The government is lying to us. The inflation is not 2 to 3%. But don't just listen to me. Don't listen to anyone on YouTube. Do your own calculations. Look at your own expenses. Dig up old credit card statements, debit card statements, bank accounts, whatever you need to do. Do your own calculations and let me know in the comments. Are you seeing 2 to 3% inflation like our governments are telling us, or are you seeing much higher inflation like I'm seeing here? And this is relevant because if inflation really is 6 to 7%, and if we want to save money, forget about investing for profit. Just think about saving now. If you want to save money, your savings have to make more than 2 to 3%, which is what the CPI is and what bonds are paying right now. They have to make 6 to 7% just to break even. That's before you even make a profit. That's not even investing to make money. That's just to break even with inflation. You have to make 6 to 7%, and that's after tax too. So if you have your savings in a taxable account, you might need to make 10% just to break even after taxes. This depends on your tax rate. It depends on your country, but whatever the numbers are, they might be a little bit different for you. You still probably have to make way more than the CPI, way more than what bonds are paying, just to avoid losing money due to inflation. And that's where metals come in. That's where gold and silver comes in. When I look at my gold, and I've been buying gold for about quite a few years now, and I looked back at the past 10 years, and I see that my gold has been appreciating by roughly 13% per year on average over the past 10 years. So 13%, I'm fine. You know, if my inflation is 6 to 7% and I'm earning 13%, even if I sell some gold and report capital gains and pay taxes, I'm still going to be over that 6 or 7% of my inflation rate. I'm still gaining in purchasing power. Silver has lagged behind gold, but even after the 10% drop, it seems to be catching up this year. We'll see what happens. Personally, I think that silver is going to keep catching up with gold. It still has a ways to go. It hasn't quite kept up with gold. I think it will. I don't know for sure, but I'm buying, hoping, thinking, counting on the fact that silver will go up. Now, does this mean that we put all our money in gold and silver, that we just go all in 100%, every last dollar or pound or whatever that we have, we put into gold and silver? I'm not doing that. No, I am not 100%. I think that we still want to invest in other things. There's stocks, there's real estate, there's all kinds of stuff that you can invest in beyond the scope of this channel. I'm not going to talk too much about this other stuff. But what percent do we put into silver and gold? And I'm just talking right now of silver and gold as an investment. I'm not talking about the whole aspect of it being a fun hobby, which I think it is as well. But purely just putting on our investor hats right now, what percent of our wealth do we put in gold and silver? I remember a few years ago, Ray Dalio, if you don't know, he's a very famous investor. He's a billionaire. He's one of the greatest investors. He's up there with Warren Buffett. So a few years ago, Ray Dalio was telling people, put 7.5% of your net worth into gold. This was part of his all-weather portfolio. I remember Ray doing interviews a few years ago telling us that almost all of his own money is in his all-weather portfolio. You open up the all-weather portfolio at 7.5% in gold. Now, I think Ray Dalio might have changed his mind here, because I saw a recent interview with him from just a few months ago, and he said that you should put 15% of your money in gold. He actually didn't say gold. I think he said alternative monies like gold, silver, and crypto, I think he said. Just for simplicity's sake, if we group it all into one category, precious metals and crypto, he said, 15%. So he increased his allocation from 7.5% to 15%. I don't think that Ray actually has a lot of money in crypto. I've seen some interviews of him talking about crypto. I don't think he's a big fan of it. So when he says 15% gold, silver, and crypto, he probably means that the vast majority of that is in gold. So he doubled the amount that he recommends to put in gold. Now, another interesting fact, Morgan Stanley recently recommended putting 20% of your money in gold. 20%. And this is kind of crazy because for so long, these big investment firms really didn't care about gold at all. They were barely investing in gold. If they had any gold at all, it would be maybe 1%. And now we're seeing these big mainstream names, Ray Dalio, Morgan Stanley, they're telling us put 15% in gold, put 20% in gold. This is a huge change in the narrative compared to a few years ago when barely anyone cared about this metal. So I want to hear, what percentage do you think is a good number? Are you still sticking to Ray's old method of 7.5%? Have you increased it to 15%? Are you listening to Morgan Stanley and putting 20%? Are you higher? Are you going up to 25%? Or are you all in? Are you 100% in silver and gold? Let me know in the comments what you're doing. I'm curious. I think that there are a lot of different ways to do this. There's no one size fits all. There are a lot of different methods. There are a lot of different approaches. There are different schools of thought. But one thing I know for sure is that fiat currency is losing value. I don't see any future in which fiat currency long-term can appreciate and help you save money. Short-term, sure. I mean, within a time frame of a few months or even a few years, fiat currencies can do well, gold and silver can suffer. I'm not talking about a short time span. I'm talking about decades. Over the next 20, 30 years, I am fairly confident, not 100% confident, but I'm confident enough that I'm putting my money into gold and silver and out of fiat because I don't think that fiat currency is going to keep up with inflation. It hasn't over the past 10 years. I don't think it will in the future. And I include bonds in this. I look at bonds for sale here in Canada. They're paying 3-4%. I mean, it's better than nothing, but 3 and 4%, maybe it keeps up with the official CPI numbers, but my own personal inflation is 6-7%. Bonds just aren't doing it for me. I need more than that. I feel like I need an asset like gold. Gold has been appreciating for me 13 to 14% a year. Some stocks that I've been investing in have been appreciating about that much. So you have to chase those higher numbers in this environment. That means that there's going to be risk. That means that there's going to be volatility. If you don't want any risk, put your money in bonds. It's set in stone. You have a contract. You'll get your 4% a year. No risk whatsoever, but you're probably not going to keep up with inflation, probably. And you haven't in the past few years. So I prefer to take on more risk. I prefer gold, silver, stocks. There is volatility. We're seeing that this week with silver. We're seeing that drop of 10%. 10% isn't even that bad. I mean, we could see in the next few years drops of 50%. Look at the charts. Look at the charts of gold and silver from the past few decades. Look at the charts for stock markets. Every 10 years or so, it seems to me that one of these big assets, they just crash 50%. That might happen to gold. It might happen to stocks. That is the price that we have to pay to try to keep up with inflation. That's the world we live in. I wish that we lived in a world where the CPI really was 2%. And then everything would be easy. We'd all just buy bonds. We'd have no risk. We'd sleep well at night. We'd all make money. We don't live in that world. We have to take more risk. I think that gold and silver is a great place to put your money if you can stand the volatility. So guys, let me know in the comments, what percentage of your money do you have in gold and silver? Let me know how you feel about these recent price drops. Are you panicking? Are you selling? Are you buying more? What do you think is going to happen next? Let me know, and over the next few days, we'll see what's going to happen, and we'll meet in another video. And don't forget to subscribe. I need more subscribers on this channel, so hit subscribe, and I'll see you again soon.